What is this word loan modification, and is it guaranteed?
A loan modification is basically one step up from a forbearance. A loan modification is a permanent restructuring of your current loan, right? So when you go, you close on your loan with your bank, it could be a 15, a 20, or a 30-year term. And let's say you get behind 3 or 4 months in a forbearance. A forbearance gives you that time, going through hard times, COVID or any other, you get the forbearance. Then what the loan modification does is the loan modification is a permanent restructure of that 15, 20, or 30 year. By Texas law, at least, it has to be in writing. Okay. So generally after a forbearance, you're looking for a loan modification. If you can't, or you did not save up the 3, 4, 5 months that you got behind in the forbearance, then what you're looking for the bank to restructure. In other words, are we going to put that 3, 4, 5 months to the back of the loan? Are you going to forgive it? That's certainly a possibility, not a probability during this time. But generally, the bank will restructure. Maybe they'll even drop the interest rate. Right? If you want an interest rate drop on your current loan without having to get a refinance, then you get a loan modification. And that is where you and your mortgage, your lender or your mortgage servicer get together. The documents are whatever the changes. Let's say it's an interest rate, or it's a principal reduction, or it's a principal increase. It's put in paper. It's signed by both parties. And then it becomes a permanent contractual right and obligation of the parties. If you don't have that, if you don't have both parties acknowledging a change in the loan, then basically Texas law says it didn't happen.
Oh, really? So I shouldn't just believe anybody that talks to me over the phone that they're gonna put me into a loan modification. It should be in writing.
No, that would be a huge mistake. And that's, if we've learned anything from the 08 mortgage crisis, that's exactly that was really what caused that crisis. Yes, the economy was, the economy took a hit. And yes, there were trouble with mortgages, but the bigger problem that came from 08 was all of the mortgage abuses by mortgage servicers, right? We found out in 08 or after 08 what dual tracking is. Dual tracking is, while the bank is working with you, promising you a loan modification, their attorneys are working on a foreclosure. And when the modification gets denied, generally within the last days before the foreclosure, then you find that your home was put up for sale. And so until that loan is permanently restructured with a signature by both parties, then you should not sleep or rest at night thinking that you're protected. You need to follow up.
So you're saying they can put me in foreclosure even though I'm working a loan modification with the bank?
There are laws that passed in 2008, or I should say in 2010, 2011. There are laws that passed that were supposed to have reduced or eliminated those mortgage abuses. Would I sit here today and say that after several hundred cases being litigated in court with myself and my staff, that is the case? No. There are still foreclosures happening, even though the homeowner may be told that the foreclosure will not happen because they're in a loan modification. So there are laws, they're not being followed. And if you buy that without competent representation, then you're doing it at your own risk.
All right, so loan modification, I've been denied. So what are my other choices?
Well, first I would say the first loan modification denial is like, asking somebody to go out on a date. If you really are interested and really like that person, then you keep trying. Okay, because in what we have found with loan modifications is that sometimes we have gotten them passed through on our 4th and 5th attempt. Okay, so a no to a loan modification the first time just means simply not now, or not under this application. It does not mean that you will never get it. I would encourage any homeowner that's gone through it, especially if they've gone through it on their own or by themselves, get help. These loan modifications are generally push through with what's called a matrix or some type of model where numbers have to match up. And so doing it by yourself may or may not work. But generally, if you get help through either an attorney or an experienced real estate agent or broker, then you will increase your chances. Will that be the end all be all, and will you automatically be assured? No. Will it increase your chances greatly of getting that? Yes. If you have tried and tried and tried, and there are and it doesn't work, then there are other alternatives, but I would not encourage somebody to move to those alternatives until they've exhausted the attempts at a loan modification.
Okay. So what are also my choices? I mean, we've talked about loan modification, but what are some other choices that if all of a sudden I get out of this forbearance and and it's a balloon payment, they're not modifying my loan. What are my other choices to stay in my home or what?
Mary, that's a great question. That's one that could take us several hours if I really sat here and drilled down into each alternative. But let me do this just for the layman's. There's in layman's terms, there's several options, and I'll try to run down them fairly quickly. The first option is if you have equity in your home, any equity whatsoever, and you see that in your near future your financial situation is not going to look any better, then you probably want to start by getting with Mary, her experienced staff agents, and try to sell the home. Okay, do not make the mistake of waiting too long to and losing your equity. I say this to homeowners all the time that come to my office. It takes a long time, as you well know, to build equity in your home. Sometimes that's a 15 or 20-year process before you're ever, reach the point where your payment is going towards equity. The unfortunate part and the flip side to that is that it takes several months of attorney's fees and payments building up or missed payments, and then higher interest rates to compound and to lose all your equity. Okay, so many years to build it, couple of months, and you're back in the negative. So don't wait. If you're in that situation where you're not going to be able to pay it, start trying to sell the home and hopefully save some equity and further financial harm. That's the first. The second option is if you really, really want to keep your home and your family in that home, then there are further options where you need to contact a bankruptcy attorney, whether it's my office or anybody else that's competent in bankruptcy law. There are alternatives, one of them being what's called a Chapter 13 bankruptcy. That is a reorganization. You hear about reorganizations for businesses. Well, they have the same for consumers, right? And a Chapter 13 in very shortly is a 5-year repayment plan. It allows you to propose a 5-year plan to keep your home. Okay. If that is not going to be possible, or you don't want to go through that, then there is what we call a short sale. A short sale is where you don't have equity in the home, and you're literally asking the bank for permission to sell the home for less than you owe the bank. Okay. In that situation, you can't go sell the home without permission for less than you owe. The bank will not sign off on the lien, and you will not be able to close. So in that instance, through Mary or her staff or other competent representation, you literally ask the bank to sell it for less than you owe them. If the bank gives permission, then the bank will generally give you a time frame where you can go sell that home. Now, that begs the question, right? Well, why do I care about selling the home for less? Why don't at that point, wouldn't I just let the home go? Well, no, you don't want to do that. If you can get a short sale, then you do that, because a short sale is a final agreement between you and your lender that you're going to close the file out. If you don't do that, and you take the worst option of all, which is a foreclosure, there's also the possibility that if you get foreclosed, you're going to still owe the bank money. right? In a short sale, they close out, you're done. If you take a foreclosure and you're upside down $30,000, $40,000, they could actually sue you for that $30,000, $40,000 because the foreclosure did not pay your entire bill.
Wow.
So you have to think of it that way. It's not closing your entire bill. If you owe 150 and your house sells at foreclosure for 75, you still owe the bank 75,000. They can sue you for that $75,000. So your nightmare may not be over, right? So if we can take one thing away from this video, foreclosure should be your last option. It really should not be an option, because if you go through the other steps that I just gave out, one of them will generally go through, right? After a short sale, then you can look into what's called a deed in lieu. A deed in lieu is where you're giving the house back to the bank. Now, there are legal reasons why that may not work, and so that would probably be the last option right before foreclosure that I would attempt.
So I understand the last 6 months have been absolutely a change in this world. And with COVID, and we understand all the challenges owning a home. Possibly we lost our job or whatever in the last 6 months. But what I'm really getting away from all these questions and these answers is get help and get your answers, get your questions answered so that you know what the right choice is for you.
There's absolutely no doubt, Mary, that the takeaway from this video should be, A, there are options, and B, you need somebody to walk you through those options, okay? I know we're in the DIY, do-it-yourself YouTube era. You know, let's leave that to woodworking or something else. If you're talking about the roof over your head or your family's roof over their head, then this is not the time to be experimenting. This is not the time to be trying to learn how to be an attorney. You know, you're dealing with an industry, especially the mortgage industry. They've put, as we well know, they've been given and they've put billions and trillions of dollars into ensuring that they come out ahead. And so trying to go at this alone, trying to figure this out, keep this in mind. If you're a homeowner, this may be the first or second time, third time that you're doing this for your life, in your lifetime. On the other side, you're dealing with somebody that has probably 1,000 to 2,000 files within the last year that they've dealt with. So just keep that in mind. The odds are stacked against you in doing it yourself. The likelihood, it's a minefield. The likelihood that you're going to injure yourself or your family financially or even, you know, physically by not having a house is very high. You know, heed my warning. I've only been doing this for the last 10 years with several hundred cases in court and several thousand cases negotiated out of court. It takes skill, it takes time, and it takes a staff to really get this done properly. So get yourself help.
And I thank you, Rick. And I want to let everybody know, we're not here for the profit. We're here for you to get your questions answered. And our numbers are on the screen. Please give us a call. This is not costing you anything. This is more, please just get your questions answered so that you know what the right decision is for you.
Mary, I thank you. And as well, I share that sentiment. I can assure you that we make a lot more money fighting battles in court. My office and myself, and obviously your office, are doing this as a, you know, these videos, this information is a public service, and it's only because of what we've learned over the last 10 years in helping homeowners that you know, we've agreed to do this. I hope that everybody stays safe from COVID and keeps their family with a good roof over their head. So thank you for having me today, and I look forward to you know, providing more answers and more solutions as, you know, as the months roll by.
All right, thank you, Rick.
Thank you, Mary.